Hi students, how are you? Kindly confirm, can you hear me? Dear students, can you hear me? Okay, so welcome in the class. I'm your tutor. My name is Abu Bakar, and I have been teaching various paper of FR. Uh, you can say at least uh, from for at least 13 to 14 years, especially FR, SPR, and FM. So, and PM as well. So I'm your tutor, and today we are going to start the class of financial reporting. This is our first class, and in this class, first of all, we will be having some introduction of the subject, and then we will commence the topic. So, without any further delay, dear students, the paper we are going to study, as you know, is financial reporting. Financial reporting is the paper. Before the financial reporting, you have studied the financial accounting paper at the foundation level or at the knowledge level of ACCA. We have financial accounting, then we have financial reporting, which we are going to learn today. And after the financial reporting, the next paper you will be studying in this stream will be the strategic business reporting, SBR. Strategic business reporting paper would be the next paper after the financial reporting. So we can say the things which we have learned in a financial accounting, in a knowledge level of ACCA or a foundation level of ACCA is going to help you in a financial reporting. And the things which we will study here in a financial reporting will definitely help you significantly in SBR, strategic business reporting. So this is the chain of the financial accounting paper, which is starting from financial accounting and it will be end on SBR in ACCA. Now, the paper of the financial reporting, which we are starting today, will be consist of various accounting standards, which we will learn in this paper, and some specialized areas. But before that, I would like to discuss the exam pattern. of this paper. Dear student, the exam pattern will be computer-based exam. It will be a CB exam. And this CB exam will be consist of three parts. Part A, Part B, and Part C. Part A, Part B, and Part C. The Part A will be consist of OT, OT questions. OT questions mean objective test questions. OT question means objective test questions. Now, in OT question, in an objective test question, they will test the topic in a form of multiple choice questions. There will be filling the blanks. There will be true and false statement, drop down questions, drop down questions. So just like you have an experience in a foundation level or knowledge level of ACCA exam pattern, you will be having the same exam pattern in a part A, OT question, objective test question. And there will be 15 objective test questions, and each question will be consist of 2 marks, and there will be total 30 marks in this area of exam, part A. Then the next will be the part B. In part B, we will be having OT case, OT case studies. OT case studies mean objective test case studies. If I give you a reference, if you have an experience that in ACCA knowledge level, you have a concept of MTQs, which is known as multiple task question, multiple task question. In a multiple task question, you have a case study. You have a case study, and on that case study, you have multiple objective questions, maybe in a form of MCQs, filling the blanks, drop down, or true and false. Okay, there will be a case, there is a case study, and you have a OT question. So similarly, in part B, you have a OT case studies. A case study will be given, and on that case study, you will be having 5 OT questions, objective test questions, and each OT question will be consist of 2 marks. So that means each OT case study will be consist of 10 marks, and you will be having 3 OT case studies, and each OT case study will be consist of 10 marks, and there will be total 30 marks in a part B as well. So 60% of your exam will be in a form of objective questions, in a form of MCQs, fill in the blanks, true and false, drop down, matching boxes. And then you will be having the final part of your exam, that is a part C. In part C, we will be having a constructive response question. Constructive response question, which is known as CRQ, constructive response question. When I say a constructive response question, that means you will be having a long question, which need a constructive answer. A long, you can say you have to write the answer in this part of your exam. And there will be 2 questions, and each question will be consist of 20 marks, and there will be 40 marks in the part C. There will be 40 marks in the part C of your exam. In a part C, you will be having the 40 marks. So there will be 100 marks, 13 part A, 13 part B, and 40 in a part C. And in constructive response question in a part C, you will have to use the spreadsheet for numeric ones. Numeric question, like if they ask you to prepare the final accounts, you have to use the spreadsheet Excel. If they ask you to prepare the consolidated financial statement, you have to use the spreadsheet. And for the question in which you have to, you can say some explanation, or you have to conduct analysis, especially the ratio analysis. There will be a question of a ratio analysis, interpretation of the financial statement. For such question, they will give you the word option to write your answer, So that would be the, you can say, the format of your exam. That would be the format of your exam. That would be in a form of the computer-based exam. Got it? Do you have any question regarding your exam pattern?
Yeah, that's fine.
That's good.
Thank you.
Okay. Now, let's talk about the topics, the areas which we will be covering in this journey of financial reporting. That is a list of the topics and the pattern of the topic which we will follow in this class. The first topic we are going to be covered here will be IAS 16, property, plant and equipment. In this area, we will be discussing the accounting for tangible non-current assets like land, building, plant and machinery, uh, vehicles, furniture and fixtures. Such tangible non-current asset accounting will be covered or we will be covering in IAS 16 property, plant and equipment. The next topic we will cover after the property, plant and equipment IAS 16 would be the IAS 20. IAS 20. IAS 20 is an accounting standard for the government grants, Now, what is the government grant? Government grant is basically, you can say, help for entity by government or from any agency recognize the government. So in IAS 20, if government helps an entity in any form, how to account for that help in a financial statement, we will be discussing in IAS 20. This help could be in a form of land, building, machinery, software, cash, or maybe in a form of any sort of assistance. That topic will be covered in IAS 20, government grant. Then the next area we will be covering after IAS 20 will be the IAS 23. IAS 23 is, you can see, is a borrowing cost. The name of the topic is borrowing cost. Borrowing cost means finance cost. Borrowing costs mean interest, expense, finance cost, interest expense, borrowing cost. These are same. Now, normally we have learned that the interest cost is an expense to be recognized in profit and loss account. To be recognized in profit and loss account. But in some cases, in some very specific situations, interest cost must be capitalized in the cost of the asset. Like for example, if I am constructing a house by taking a bank loan, then the interest cost on that bank loan will be capitalized as the part of the cost of the asset. That's the new thing. So when the interest cost will be capitalized, at what value it will be capitalized, when we will start the capitalization, and when we will end the capitalization of the finance cost, that area, that issue, we will be covering in IAS 23. The borrowing cost. The borrowing cost. The next topic after the borrowing cost will be IAS 36. IAS 36 is a topic which covers the issue of impairment of non-current assets. Impairment of non-current assets. Now, what is impairment? In a simple word, we can say the impairment is a reduction in the perceived economic benefits from the asset. Like for example, if when I purchased the asset, I was hopeful that the economic benefit from the asset which I will get will be of 10 million US dollars. But after 2 years, due to some worse you can say event like an accident or any natural disaster, the economic benefits ability of the asset to generate the economic benefit has been reduced. So when the ability of the asset to generate the economic benefit has been reduced or decreased, it is an indication that your asset has been impaired. So you have to record an impairment loss. Now, when that impairment loss will be determined, how it will be determined, and how it will be recognized in a financial statement, that area we will cover in IAS 36, impairment of asset, impairment of asset. Then the next part of the study will be IAS 38, intangible asset, intangible non-current asset. In IAS 38, we will be covering the accounting of non-current asset which does not have a physical existence or does not have a physical substance. Like, for example, if I give an example, software, copyrights, patent, these assets, software, copyright, or patent, these are the assets which are without any physical existence, without any physical substance. Now, the accounting for such non-current asset, we will be covering in IAS 38, intangible non-current assets. Any question? Dear student, are you getting the points?
Yes, no questions so far for me.
If you have, during the introduction, if you have any question, any query, please don't hesitate to ask the question. Okay, now, after the IAS 38, intangible non-current asset, the next area which I will be covering will be the investment property. Investment property. Now, investment property is basically land and building, but it is such land and building which we held for rental income purposes, or you can say for capital appreciation. Now we have two types of property in terms of non-current asset in our financial reporting. One property is a property which is held for use in business. A property which is held for use in the business. Now, the property which we held for use in the business is accounted for under IAS 16. Like a property which is held for factory, a property which is held to provide services, a property in which we are running our retail business, a property where we are running education facilities. Now, this property is held for use in business. It is accounted for IAS 16 property, plant and equipment. But there is an other type of a property which is held for rental income purpose. Held for rental income, or may be held for capital gain, or may be held for capital gain. Now, such properties which held for rental income purposes or for capital appreciation or a capital gain, such properties are known as investment property, and such property we account for under IAS 40. We have a separate accounting standard for investment properties, IAS 40. Then we have IFRS 5, non-current asset held for sale and discontinued operations. Now, what is held for sale, first of all? For example, we have a textile company, a textile manufacturing unit. We purchase machinery for textile products, and that machinery is accounted for under IS 16 property, plant and equipment, under IS 16 property, plant and equipment. Such properties we account for under IS 16 property, plant and equipment. And we were using that property for last 10 years. But after 10 years, when the technology changes, or when the machine is become older and it is not for any further use for us, the company may decide that now we are going to sell that machine. We are going to dispose of that machine. We are going to dispose of that machine. Now, that machine, that plant, or that equipment will be known as non-current asset held for sale. Non-current asset held for sale. And it will be accounted for under IFRS 5. And discontinued operation means when you are going to shut down your product line, or you are going to shut down your business in a particular geographical area. Now, such shutdown of the business is known as discontinued operations, and discontinued operations we account for under IFRS 5. So discontinued operation and asset held for sale, we will be accounted for under IFRS 5. After the IFRS 5, the next topic will be IS 12. IS 12 is an accounting standard of income taxation. In this accounting standard, we will learn that how to account for the taxation in the financial statement. So accounting for tax or issues relating to accounting for taxation will be accounted for in IS 12 income tax. Then we have inventory. For that purpose, we have IS 2. Now, people all know that what is inventory. Inventory is the raw material held for manufacturing purpose. Inventory is the work in progress. Inventory is the finished good held for sale in the ordinary course of a business. Such items are known as inventory, and for inventory we have IS 2. Then we have IS 41, biological assets. Biological assets mean the assets which have a life, the living things are known as biological assets. If, for example, if we are talking about agriculture-based businesses, so the crops, the plants are biological assets. If you have a dairy farming, then the cows, buffaloes are the biological assets. So if you are doing or conducting any business activity which involves the biological asset, living things like plants and animals, to account for those biological assets, we will learn IAS 41, that how we should account for the biological asset in the financial statement. For that purpose, we have IAS 41. Then we will have the test number 1, in which we will cover the topics till IAS 41, starting from IAS 16 to IAS 41. And the testing methodology will be Part A, and part B of your exam means OT questions and OT case studies will be covered in this test number 1 or in a form of OT and OT case study. The test 1 will be conducted. After that, we will have the other accounting standard in which we have IS 8. In IS 8, we will learn about accounting policies like if I give an example of accounting policy, inventory valuation method, LIFO, FIFO, in IS 16, revaluation model, cost model, these are the accounting policies. We will learn about the accounting policies or change in accounting policy. We will learn about the change in accounting estimate like depreciation, useful life, residual value, and accounting errors. If we have any errors in our accounting or in our financial statement in the prior year, so how we should account for the change in policy or adoption of a new policy or change in estimate or how to correct the accounting error. We will learn that thing in IAS 8, accounting policies, estimates, and errors. Then we have IAS 37. In IAS 37, we will be learning about the provisions, contingent liabilities, and contingent assets. Okay. Provision is a form for a time being, it is form of a liability. Provision is a form of a liability, like warranty provision, refund provision, dismantling cost provisions. Then we have contingent liability here and contingent assets. So how we will account for provisions, contingent liabilities, and contingent assets? For that purpose, we have the IAS 37. Then we have a touch of IFRS 13. It is an accounting standard of fair value measurement. Fair value measurement. If we have to measure some assets or liabilities at fair value, then how should the fair value will be determined? For that purpose, we have IFRS 13. Then we have IFRS 15. It is an accounting standard of revenue recognition and revenue measurement. In IFRS 15, we will talk about the revenue. Then we have IS 32 and IFRS 9. IS 32 and IFRS 9 is the accounting standard for financial assets and financial liabilities, like trade receivables, trade payables, debentures, preference shares, loan notes. These are known as financial instruments. It could be in the form of financial asset or a financial liability. So what are the financial assets, financial liabilities, and how we should account for the financial assets and financial liabilities in our financial statement? We will be learning this aspect in IS 32 and IFRS 9. Then we have the next topic, which is IFRS 16. In IFRS 16, I will be teaching you about the accounting of the lease, accounting of lease. Sometimes instead of purchasing the asset in the form of cash, we acquire the asset in a lease format, means on installment. In a simple word, you get an asset on installment basis. That is known as the lease arrangement or lease agreement. So how should we account for the lease? We will learn in IFRS 16. Then we have IFRS 10. IFRS 10 is IAS 10. IAS 10 is an accounting standard in which we will talk about events after reporting period. Now, the after reporting period means the period which is started immediately after the year end, and that period ends when the financial statements are authorized for issue. So, for example, if your financial year end is 31st December and management authorized the financial statement on 1st March to issue to the shareholder, so that from 1st January to 1st March, these 2 months will be known as after reporting period, the period which is after the year end. And the events which will take place in these months will be known as events after reporting period. Now, how to account for such periods, we will learn that thing in IAS 10, And after this IAS 10, the second grade will be at, and the test 2 will be conducted. And again, this test will also be in the form of OT questions. And OT case studies. And after that, our final area will be started, which is preparation of the financial statement. In preparation of this financial statement, one accounting standard which we will learn is IAS 33, which is earning per share, EPS, known as EPS. How to account for, how to calculate EPS, we will learn in IAS 33. And in this area, we will also learn to prepare the financial statement, known as final accounts. In this area, we will also learn the final account, how to prepare the financial statement. And there is a major change in this area, and let me tell you that change. Previously, the standard which governed the preparation of the financial statement was IAS 1, International Accounting Standard 1, was the accounting standard which is guide us that how to prepare the financial statement. But now the IAS 1 has been replaced by a new accounting standard which is known as IFRS 18. IFRS 18 has replaced the IAS 1. So now the format of the financial statement will be some sort of, you can say, a new format of the statement you will see, especially in profit and loss account. There are significant changes in the format of the financial statement, especially in the preparation of the profit and loss account. We will learn that thing when we will reach that area, but we will be learning this after covering all the accounting standards, because without accounting standard, we cannot conduct the preparation of the financial statement. Okay. And when we will start the preparation of the financial statement, we will learn the IFRS 18 as well. Then we have the cash flow statement, IAS 7. Here we will learn to prepare the cash flow statements. Then we have the group accounts. Group accounts means the consolidated financial statements. We will learn how to prepare the consolidated financial statement, consolidated profit and loss account, consolidated statement of financial position, and accounting for associate. We will learn in our group accounts. And there will be another topic which we will be covering here, which I have confined in the preparation of the financial statement. But The name of that topic is ratio analysis, interpretation of the financial statement. That will be another area which we will be covering here. And on accounting standard, we will be covering, which I not mention here, that is IAS 21, Forex, exchange rate. If there is change in a foreign exchange rate, how to convert that change in a financial statement, we will learn in IAS 21. It is an accounting standard. Now, let me tell you that in a part C, the area which will be tested from you, and in part C, you will be tested with the two questions. One question will be from the ratios, from the ratio analysis, and I am sure 98% chance is that one question will be from the ratio. And the question from the ratio will be having total 20 marks. And it is a must question. It is a must question. It is a must question which you will see in the part C of your exam. And the second question may be from final accounts or maybe from group account. The second question will be from final account or group account. But one question will be from the ratio analysis. Okay. The IS 33 and cash flow. These topics will be tested, if they are tested, will be tested in a part B, in a form of OT case studies, IS 33 and IAS 7 cash flow statement. Okay, so, and the part A and part B of your exam will be covering all the syllabus. From IS 16 to group account, part A and part B will be cover all the parts, but in a part C, one question will be from the ratio analysis, and the second question will be from the final accounts or maybe from the consolidated financial statements. And after covering all these things, all these areas, I will at the end of the session, we will be covering the conceptual framework as well, but that will be done at the end of the syllabus or at the end of the class. And that would be your course plan, that would be your pattern, and that would be the sequence in which we will follow the topics. Any question? Dear students, any query? Okay, can you people give me your introduction so I have an idea of your background studies? For example, some students get some exemptions on the basis of a university degree, and some students are from directly ACCA route. Can you tell me what is your route of ACCA journey? Are you from ACCA stream or you are from exemption stream? Kindly give the answer in a chat box. So I have an idea of the diversification of the class. Yes, students, please kindly respond. The remaining one. Okay, okay. So I got it. I got it. I got all the responses. That's great. Thank you very much. Okay, now, so that was the introduction. That was the introduction. Yes, yes, I got it. You have exemption from three paper. Yes, from when you are from the ACCA university stream, there are exemption available up to 9 papers, and minimum I think 3 to 4 papers are exempted. So you have 4 exemptions. So don't worry, don't worry. I got it. Okay, so that was the introduction of the syllabus, introduction of the exam pattern, and now we will start the class with the topic. But before that, I will take a break for 5 to 10 minutes. We will take a break up to 5 to 10 minutes. And after the break, I will start the IAS 16 property, plant and equipment. But before that, take a break for 5 to 10, 5 to 10 minutes. Okay, welcome back. Yes, one more thing which I forgot to discuss. That was about the study resources. First of all, the class notes will be available for study purposes. But other than the class notes, we will be using ACCA Study Hub. ACCA Study Hub is a resource to study the ACCA. So there are books available written by ACCA, published by ACCA. So we will also using the ACCA Study Hub. But if someone want to study a book, then my recommendation is that you people should use the Kaplan. The Kaplan book you people should use. If someone want to study from the book, then the Kaplan should be used by the student. And obviously, exam practice will also be done in a question of section A and section B. For that purpose, I will be using the Kaplan exam kit. I will be using the ACC Study Hub for the practice question purposes. So there will be a lot of practice available on the topics which we will be covering. So now let's start the first topic, and that is property, plant, and equipment, IAS 16. Property, plant, and equipment, IAS 16. Now, first of all, let's define it. Property, plant, and equipment are tangible, non-current assets held for use in the business. Non-current asset held for use in the business known as property, plant, and equipment. Use in business, for example, for production purposes, like plant, machinery, manufacturing plant, factory building. For administrative purposes, like head office building. For to provide services like hospitals, schools, restaurants, cafes. Or for maybe rental purposes to provide. Yes, you will be, I told you will be having the class notes, okay? You will be having the class notes that would be provided on LMS. So as I am giving you a lecture on I16, so this is a way of delivering the lecture in the class, and for the revision purposes, you have the class notes, okay? The notes will be provided to you in a three form: volume 1, volume 2, and volume 3, and they will be available on LMS. So production, administrative, services, or for rental purposes. But keep one thing in mind: for rental purposes, there is one exception. There will be one exception, and that is property. If we have a property for rental purposes, then the accounting standard will be IAS 40, will be IAS 40. Then it would not be accounted for under IAS 16. For that purpose, we have investment property IAS 40. And another thing, which accounted for under IAS 16 property, plant and equipment, is bearer plant. Now the bearer plant is basically a biological asset. Bearer plant is a biological asset, but it is accounted for under IAS 16. Now the bearer plant means a plant which give us the production more than a year, and we do not need to harvest that plant in order to get the product from the plant. If I give you the example of the bearer plant, apple tree is the bearer plant. mango tree, or you can say any fruit tree like dates, or pineapple. So such plants are known as bearer plants. In order to get the apple from the tree, you do not need to harvest the tree. In order to get the mango from the tree, you do not need to harvest the tree. The agriculture produce the fruit will be on the tree every year, and you can get the fruit. And such plants, such biological assets are known as bearer plants. These are biological assets, but they does not come under the scope of IS 41. They come under the scope of IAS 16 property, plant and equipment. So you have any business, for example, if you have the business of like agriculture business in which you have trees, apple trees, you have mango trees. So those trees will be come under IAS 16 property, plant and equipment. Property, plant and equipment. They do not come under IAS 41. So land, building, plant, machinery, vehicle, equipment, furniture and fixture, and the bearer plants. Apple tree, mango trees are the examples of the property, plant and equipment which come under the scope of IAS 16. So this is basically the scope of IAS 16 property, plant and equipment. Any question? Okay. Now, another definition need to discuss is depreciation. Depreciation. Depreciation is a systematic allocation of the depreciable amount over the useful life of the asset. Now, systematic allocation means the pattern of depreciation. Systematic allocation means the pattern of depreciation. It could be straight line, it could be reducing balance. It could be activity based depreciation. For example, if you have a non-current asset which provide you economic benefit over the year and those benefits are same in each year, so the depreciation which we can use here will be the straight line depreciation method. Straight line depreciation method. Straight line, in which you take cost minus residual value divided by life. A straight line depreciation method. But if the pattern of economic benefit from the asset is that in the start you have more economic benefits, but as the asset is getting older, the benefits from the asset are now reducing. In such cases, the depreciation method which we can use will be the reducing balance depreciation method. In reducing balance, the depreciation is equal to cost minus accumulated depreciation multiplied by the percentage of the depreciation. The third one is activity-based depreciation. If the benefits from the asset depends on the usage of the asset, that how much we use the asset, like if you have a machine which consumption based on the hours, that how much hours you have run the machine or how much units you have produced the machine. In such cases, you use the activity-based depreciation method, in which you take cost minus residual value divided by, let's say if we are talking about in hours, divided by total hours, and you will get the depreciation per hour. That method is known as activity-based depreciation. So systematic allocation means the pattern of your depreciation, the pattern of your benefits. That pattern of your benefits will decide that what depreciation method is suited to that particular asset. If we have plant and machinery, vehicles, then reducing balance would be appropriate. If we are talking about the buildings, in that case, the straight line basis would be appropriate. If we are talking about engines, like jet engines, in that case, the hours based flying hours would be the appropriate depreciation method. So depreciation is the systematic allocation of the depreciable amount over the useful life of the asset. But now more importantly, there is another word which is known as depreciable amount. Dear student, depreciable amount means the amount which will be depreciated. The amount which will be depreciated. That amount is known as depreciable amount, and the depreciable amount is equals to cost minus residual value. Cost minus residual value is known as depreciable amount. And the entry we use to record the depreciation is normally is debit the depreciation and credit the accumulated depreciation. Okay, now let's say we have an asset whose cost is 50,000, residual value is 10,000, life is 4 years. Now, if apply these concepts, if I apply these concepts on this example, the straight line reducing balance, what would be the way to calculate the depreciation? Now, let's say if I'm talking about the straight line based depreciation, the depreciable amount the depreciable amount is $40,000. This amount should be depreciated over the useful life of the asset, whether I'm using the straight line or whether I'm using the reducing balance method. Now, for example, if I'm using the straight line, the depreciation per year will be 50 minus residual value divided by 4. So per year depreciation will be 10,000, and in each year depreciation will be debited and accumulated depreciation will be credited with $10,000 with $10,000 in each year. So as a result, in year one, the carrying value will be cost minus accumulated depreciation. Carrying value is 40,000. In year two, cost minus accumulated depreciation. Carrying value will be 30,000. In year three, accumulated depreciation will be 30,000 and carrying value will be 20,000. And in year four, the accumulated depreciation will become 40,000 and the last carrying value will be 10,000, which is equals to the residual value, the amount which will not be depreciated. So in these 4 years, you have depreciated the depreciable amount, which is equal to 40,000. Now, in a straight line method, that depreciable amount has been spread evenly on straight line basis over the life of the asset, But if we have the same asset and I have to use the reducing balance method, And you know that in reducing balance method, we need a percentage, and I have calculated that percentage, and that is 33.13%. This is the percentage to be used if I am using the reducing balance method. This is the rate of depreciation. And in reducing balance, let me remind you, the formula to calculate the depreciation will be cost minus accumulated depreciation multiplied by percentage. Multiply by percentage. Okay, now if I am using the reducing balance, then year one, the depreciation will be 50,000 minus 0, because there is no accumulated depreciation in a year one. So the depreciation of the first year will be 16,565. This will be the depreciation. And depreciation will be debited and accumulated depreciation will be credited. So at the year one end, the carrying value will be 50,000 minus 1,116,565. It will give you 33,435. The second year, cost minus accumulated depreciation, which is 16,565 into 33.13%. The depreciation will be 11,077. 11,077. So the carrying value will be equals to cost less accumulated depreciation, which is 27,642. Will be 22,358. Now in year three, depreciation will be cost minus previous accumulated depreciation into percentage. So it will be 7,407. So the carrying value will be equal to cost minus accumulated depreciation 27642 plus depreciation for the year 7407. So it will be 35,049, and the carrying value will be 14951. In a year 4, depreciation will be 50,000 minus accumulated depreciation into 33.13%. It will be 4951. After adjusting the rounding, it will be 4951. And at the end of the 4th year, 50,000 minus accumulated depreciation, which is now 40,000. 35049 plus 4951. Your last carrying value is equal to 10,000, which is equal to residual value. So these are the two methods to calculate the depreciation, straight line or reducing balance. And these two methods are just the estimation of the allocation of the total depreciable amount. In straight line, we allocate the depreciable amount over the same pattern on constant basis, but in reducing balance, the depreciation in the earlier years are high and later years depreciation is low, but the total depreciable amount remains the same. In total depreciable amount, there will be no change. Got it? So these are the methods of the depreciation which we will using in the depreciation related question. And let me tell you one more thing. The concept behind the depreciation is accrual concept and matching concept of the accounting, accrual and matching concept. When you use the asset, when you consume the asset, you should record the expense. And when you use the asset against the usage, you get the benefit. So according to matching concept, you must compare the cost with the expense with the benefit in the same accounting period. That is known as matching concept. Okay. So if in MCQ question, someone asks you that why we calculate the depreciation, the answer will be the accrual concept and the matching concept. Accrual concept and the matching concept. Any question? If anyone out there does not have the idea of accrual concept and matching concept, can ask the question. Anyone? Okay, no problem. Okay, accrual concept. Okay, accrual concept is basically a very basic and underlying concept of the financial statement. According to accrual concept, we record a transaction when it is incurred, not when it is paid. Like for example, if you have used the electricity, you have to record the electricity expense. You will not wait for the payment. Okay, that is an accrual concept. So when you consume something, when you incur something, you should record the expense. When you earn something, you should record the income. Now, if I apply this concept on the depreciation, look, when you purchase an asset, like for example, if you purchase a car for let's say $10,000, you have purchased a car. The car is a non-current asset. You cannot use the car simultaneously. You have to use it over 4 years, 5 years, 10 years, whatever the useful life you have to use it. And when you will use it, you are consuming the benefits of the car. So when you are consuming the benefits, you have to record that consumption as an expense. Okay? You are not recording the car expense when you purchase it, but you will record the car expense when you will use it in a form of depreciation. It is because of the accrual concept. That is an accrual concept. Okay. And if we talk about the matching concept, the matching concept asks us that the revenue which you have generated, obviously against that revenue, against that income, you have incurred some expenses, Now, the benefit, for example, the revenue and the expense which we have incurred to generate that revenue should be matched in the same accounting period. Now, for example, if we have a manufacturing business and we are talking about a depreciation of a manufacturing machine, so when you use the machine, you have produced something which you have sold ultimately. That generate a revenue. Now, the revenue is generated due to the production, and the depreciation is an cost, which is an example of the cost of depreciation. So it should be matched in a same accounting period to calculate the profit. That concept is known as matching concept. And these two concepts are basically behind the calculation and the recording of the depreciation in the financial statement. Got it now? Okay. Now we have discussed the definition of property, plant and equipment. We have discussed the definition of the depreciation. Now another definition is a definition of cost. Cost is the fair value of consideration. The fair value of the consideration is cost. For example, A Limited purchased a car for $20,000 cash. Now the cash is the consideration. Cash is the consideration for the car. Now, if someone asks me that what is the car cost, my answer will be very simple, that the cost of the car is $20,000. Fair value of the consideration. Another example. A Limited purchased a plant for a property having fair value of $40,000. Now the property here is the consideration. Property here is the consideration. So now if someone asks me that what's the plant cost, my answer will be the cost of the plant is $40,000. So the cost is the fair value of the consideration. The fair value of the consideration will be the cost. That is the definition of the cost. And the last definition, which may be useful in IAS 16, is the definition of impairment. Impairment means if carrying value is less than recoverable amount of non-current asset. If carrying value is less than recoverable amount of the asset, that means we have impairment on asset. Carrying value is cost less accumulated depreciation and recoverable amount is higher of value in use or fair value less cost to sell. Value in use or fair value less cost to sell. Fair value less cost to sell mean if you're going to sell the machine, at what value it will be sold, and cost to sell mean commission which you have to give to the dealer on the sale. Value in use mean if you do not sell the machine and you will continue to use the machine, the benefit which you will generate is known as value in use. Now, for example, if we have an asset with the cost of 1,000 and accumulated depreciation of 400 and the carrying value of the machine is $600, but the value in use of the machine is 500 and fair value of the machine is 525 and cost to sell is 20. So fair value less cost to sell is 505. So that means your balance sheet, your financial position is telling that the carrying value of the machine is 600, means your economic benefit, expected benefits are 600. But when you calculate the recoverable amount, and the recoverable amount is the actual economic benefit which you can generate. You can say it is an actual economic benefit or the maximum economic benefit which we can generate from the asset. So when you determine the value in use, it is 500. And when you determine the fair value less cost to sell is 505. So recoverable amount is 505. So the maximum benefit you can generate from the asset is 505. But you are carrying that asset in your financial statement at 600. You're carrying the asset at 600. Now that means if you're carrying the asset at 600, that means your asset has been overstated. Your asset has been overstated by 95. And that is against the prudence concept. That is against the prudence concept. So according to accounting, you have to record an impairment loss of 95. You have to record an impairment loss of 95. That is the definition of impairment. Okay. For that purpose, we will also study IAS 36, but it has a linkages with IAS 16. So it is better to know the definition of impairment. So the definition, again, I'm repeating, if the carrying value is less than recoverable amount. Recoverable amount is the maximum economic benefit we can generate from the asset. It is higher of value in use or fair value less cost to sell. Value in use is the value which you can generate from the usage of the asset. Fair value less cost to sell is the value which you can generate by selling the asset. So if the carrying value is more and fair value and the recoverable amount is less, that means your asset has been impaired. So there is need to record an impairment loss. Like in this example, we have recorded an impairment loss of 95. Got it? Any question? Okay, students. So we are now we're going to end the class. We're going to end the class now in the next class, next Saturday. I will continue with the IAS 16 property, plant and equipment. So till then, goodbye and take care and see you next week. Okay. Thank you very much for joining the class. Goodbye and take care. Goodbye. Okay, due to some technical issue, I lost the connection. The last word of the today class. Thank you very much for joining the class. Hopefully, you have understood all the concepts we have discussed, and hope to see you in the next class. So till then, goodbye and take care. See you next week.